Hey, everybody, welcome back to another edition of Market Talks with Dr. Stocks. It is the 2nd of June, 2025, the right in the middle of a market day, and the market's doing pretty well today after a bit of a early scare off the open. We had a red overnight future session, and it got even worse after the bell, and we've been all up ever since. Not a big up day, not anything to get too excited about, but we're in a number of stocks and sectors that are doing really well. So, all that will be shared in just a little bit. But first, let me just let you know that this is coming to you live from the live trading room of drstocks.com. It's a Discord room. And if you want to join us, you go over to drstoxx.com, click on the subscribe button, scroll down to the live trading room. And if you want to add on at a discount our brand new live options room, you can do that as well. All right. Hope everyone's having a great trading day. We sure are in the live room, and the live options room is really going well. So let me get started here by going over to some charts. All right. So I want to show you. I was just sharing this with the with some of the members in my room before we started that I have a friend who he does proprietary technical trading. He trades for a living. He's a member of my pro trading group, and he developed a trading system that is very simple. Although the way he trades it, it's a little more complex. But there are two indicators that form the basis of his stock selection system. I've shared this with the YouTube channel before and with members of our live trading room and the live options room. And my friend will not share the entire system, and that's fine. He's welcome to do that. But he is sharing with me a scan that he developed that satisfies two of the main technical indicators of the system. And I've been playing around with those lists. And sorry, somebody is trying to get my attention here and on the Facebook Messenger, and I'll just have to ignore that for now. Um, so I've been taking his list to get 6, 7, 8 stocks a day that satisfy the two requirements, and then I've been whittling those down into those most likely to bounce strongly, and so far so good. We're having some really good success with some of these. So let me show you one of the recent stocks that came through his system, and I'm in this one actually myself, and shared this with members of both rooms. It's XNCR. I also posted charts of this over on StockTwits and Twitter. And this is the kind of stock that you see in his trading system. Not a good looking stock, right? This is not a trending stock. This is not a trend following kind of candidate. Typically, we trade the trend. So if it's an uptrend, we go long. If it's a downtrend, we go short. And we time our entries using technical analysis. This is a downtrend, but we're not going to go short. Here, we are looking for a bounce. I've said this many times. If you take 100 stocks that are trading up at 52-week highs, 100 stocks trading at 52-week lows, and you track them over the next 12 months, you're going to see the 52-week highs set doing much better than the 52-week lows. However, if you have certain parameters in place, and if you're looking for certain things to trigger a buy entry to those stocks down at the 52-week lows, you take that set, and just on a trade by trade basis, you're going to outperform those up at 52-week highs. So if we can find that magic formula that will tell us which of the stocks that are down at 52-week lows are most likely to bounce strongly, we'll have a pretty good trading system, a very good trading system. Now, I have my own version of this, and I wrote it up in a manual. If you're interested, you go to the drstocks.com site, click on How to Trade, scroll down to Manuals. You'll find it there. It's called How to Make 50% per Month Trading Stocks. And it's a system. Not every stock that we buy in that system makes 50%, but I took several hundred stocks, all of which hit 52-week lows and then went on to go 50% over the next month. And I looked at technicals, I looked at fundamentals, I looked at growth, I looked at valuations, and I found a pattern that is most common to those kinds of stocks, and that's what you'll find in that manual. All right, but here's a different kind of system, and I like this one a lot. It's very simple. Two technical parameters have to be satisfied. First of all, the RSI at 14 look-back periodicity has to drop below the 40 line, not the 30. That's typically where you see it set. It has to drop below the 40. That's this green line that I have down here. And you can see this green line is the signal line for the RSI. The black line is the 10-period smoothing factor. And it has dropped below 40, and it's mostly staying below 40 throughout this whole bottoming period right here. The second thing that has to happen is that with the RSI below 40, we have to see a MACD crossover from below the zero line. Right? It's going to be below the zero line because all the stocks that are down below 40 RSI are going to be below the zero line on the MACD. But you want to see a bullish crossover of the signal MACD over the smoothing, and you can see that very easily with the histogram. If you get a little green bar in the histogram, you've got the signal down there. Okay, so happened just a couple of days ago on that bar right there. It was at around 770 or so on XNCR. We have that RSI below 40. We had the MACD histogram. That was Thursday of last week. Trigger a bullish crossover below the zero line. The zero line's up here. And that satisfied the two requirements. Now, I am filtering these in a couple of ways. Number one, I want to see some bullish volume coming in. We saw it right in here. Big bullish volume, well above average on the long side. These are shares being accumulated. That's number one. Number two, I like to go over to a different site altogether, and I'll show you this site. Some of you may be members of this, some of you may not. But if you go to tipranks.com, which ranks all the analysts, the stock analysts that are out there on how good they perform with their buy and sell signals. And 5 stars are the only analysts we're interested in. If you type in the ticker symbol, I'm not sure this is going to work for XNCR, but let's just take a look. Yeah, okay, it does work. So I typed in XNCR, the stock we're interested in. I'm looking for two things. I want to see strong buy right here. I'm not interested in moderate buy, although if I really like the stock, I might make that allowance. But strong buy is what we want. And then the second thing we were looking for is a price target among those analysts, average price target, consensus price target, well above current price. Their price target is 219% above average price, above current price. That's huge, right? That's pretty rare. In fact, you don't usually see that. It's such a high percentage. Now, the last thing I want to look for, this is not a deal killer if I can't find it, but I scroll down to see which of the analysts that are giving these buy signals and these huge price targets, which of these have solid, strong 5-star rankings. These guys don't have any rankings at all. So either they're really bad, which is possible, they're not even on the board, or they haven't done enough reports to warrant the algorithm. They haven't triggered that minimum amount, because TipRanks does have a minimum amount. So if one guy only puts out, say, two reports a year, he doesn't show up. But if he puts out 200 reports a year, he'll be on the list somewhere. The only 5-star analyst is this guy down here, and I don't know why he's got a 41% success rate and a -3. That's not a 5-star analyst. So these figures are wrong. Also, it says he's only done 22, but I think if we click on here, he's got quite a few more. Yeah, he actually has 489 ratings out there. Okay, so his success rate is a little bit below 50%. That's not great, but average return is beating the market. Okay, he's not one of the greatest analysts out there, but he is. He's worth taking note of. And again, as I said, it's not a deal killer that we don't have a whole bunch of 5-star analysts for an unknown biotech stock that nobody is really following that much. But this guy, 5-star, he works for RBC, by the way, which is the #2 ranking analyst firm. So that's a very good sign. And he's way up here at a 280% upside price target. And he just did that about 3 weeks ago. So pretty recent stuff. All right, so that's how you use TipRanks. The other tip I wanted to show you, and if you are, where is my thing here? There it is. If you're wanting to know, if you've got some stocks that have satisfied those two requirements, RSI below 40, MACD below zero line, bullish crossover, then you can also go over here to market surge. And I'm not sure this is going to satisfy what we are looking for either, but let's just put it in. You're not going to have good numbers here for a stock that is down at such a low RS rating, relative strength rating. Market surge is built around relative strength. So you're going to see stocks that get the big high rankings up near 52-week highs, and this is down at the 52-week lows. So you're not going to get some very good returns over here, but let's see what stands out, right? These two blue numbers and the two green triangles stand out. Why? Because that means that estimates are 18% higher for next year than this year, and 10% higher for the year after that. And the green triangles means that those estimates have been raised since the last time they reported. That's always good. Raised estimates are good. You can also go to the weekly chart and, okay, well, this isn't so good. This is why the stock is down at lows, right? This is a falling set of growth numbers on the EPS report every quarter. The good news is, however, that at the last corner, they turned the corner, so to speak. At the last quarter, they turned the corner and they reported something much higher than the previous quarter, which is why we're seeing those blue numbers there rather than red numbers. So all good, all things pointing in the right direction. And then, as I said before, volume is big, and we've had some really good volume in the last couple of days. So is XNCR going to do exactly what we want it to do and go all the way up and test this neckline here above 11? Maybe. The chances are better than average that it will do something like that, but man, it's got a long way to go. It's got to get above the 21. It's got to break out of the LRC, which is falling. It's got to give above the 50, and then it can start to look at getting it at 11. But here's the other thing I like about this one, and this is the last thing you can check. You go over to FinViz, type in the ticker symbol, check the shares outstanding. 70 million is very small, very small. A stock like Microsoft or Apple, they're up in the billions of shares that are available to the market. Your standard, I don't know, S&P 500 stock is going to be 500 million, 600 million. If you have something under 100 million, that is a very small amount of shares that are available, which means that when people start wanting those shares, the price is going to go up and up. It's supply and demand, right? There's not a whole lot of supply. If the demand goes up, the price has got to go up. Supply demand curve, right? From Economics 101. The other thing I like about it is that 13% of that float is short. That's a big number. I mean, it's not 25%, it's not 30%. Some of the biggest shorts in the market have that kind of number, but 13% is a lot bigger than most stocks, right? So a lot of people are short this. I can see why. It's been going down and down and down. Why not short it? Ride the next leg lower. But those guys are going to have to cover if it starts getting up above certain levels. And we're starting to move in that direction. Okay, so all of that is to say that the two parameters of the system, take a look, see if you can find stocks that satisfy those. And then you've got a process now of eliminating those stocks on the list just so you can whittle down to several that have the best chances of moving higher. Okay, that's all I want to say about that. That's all I want to say about that. Let's take a look at some charts, some indexes. Okay, so we're up near the highs of the day. That's good. We did not get under, at least the S&P did not, and no, the S&P and the NASDAQ undercut the lows of the session right off the bell. It was about 9:45, 10 o'clock when the initial run up got faded, and then the algos kick in, and then it shot right down and took out the lows of the overnight session, but not the lows of Friday's session last week. So that's all good, right? If we stay above Friday's lows, because that was kind of a deep cut, it was painful. We got a couple of stop outs, which we didn't like, because then the market went right back up and closed near the highs of the day. That's just trading 101. I had them a little too tight, probably, for the market conditions. But we're above that level today, so that's good. Same with the NASDAQ. We're above yesterday, Friday's level, and we are banging up on, we're really banging up on the top of this very tight range, right? We've been in this 2.5 weeks. We've been in this tight little trading range after a very nice run off the April 7th lows. April 7th, I'm with Tom Lee on this one. I do think that April 7th marked the beginning of a new bull cycle. We had the bear cycle, 2022, 2023, a little bit early 2024. We had several months of transition with the new administration and then the tariffs and all kinds of stuff coming in. So I think April 7th marked the low of that bear market cycle. And now we're into a new bull market cycle. And the good news is bull markets last a lot longer than bear markets. We're not in recession. Labor market's still okay. Inflation is coming way down. Fed is probably going to start cutting, and they should start cutting rates soon. And earnings have been, I would say, modestly good, not great. And there's been a lot of companies that said, "Oh, we're not sure what's going to happen with tariffs." But in terms of the quarter, it was not bad. We're seeing a lot of good beats, double beats on top and bottom line. So all of that's good. Consolidation, and here is the range of new highs, all-time highs. We're not yet at the top of that range, but we are inside of that range, and that's where we want to be. We really want to be there. I do think we're going to have a couple more days. It's possible we'll come back down and test the lows of this range. I don't really want to see that around 21,000, the 21 EMA. That would be a little scary because there's going to be a lot of stops underneath today's low and Friday's low that'll get triggered. But that's possible. It's just possible. I've been saying that I think today was some back and fill on Friday's weakness. Tomorrow might be some back and fill on today's strength. It's just what the market does, right? But then I think that will clear out. That should clear out the weak hands and clear out the new bears, we'll bring in new bears, and those are the guys that will jump out as quickly as possible when it starts going back up again. And I think by the end of the week, we'll be higher than we are now. And by the end of the month, we'll be higher than we are now. So all good stuff. Okay, so that's the NASDAQ. The S&P, pretty much the same story. Let's take a look at the small caps. Small caps have been weak, starting to get stronger, but we're still underneath the 200 period moving average, and we're still way, way, way below, several years below all-time highs. However, and I'm not the only guy to see this, every time we look at the charts, this is what we see. We see this left shoulder, we see this head, and we see a nice, tight, shallow right shoulder above the 21. 21 is bullishy above the 50. 50's gone flat. The 200's gone flat. This is a very good place. I'm not saying that the Russell is a buy today. It may be another week or so before it is a real good buy. But I got my eye on getting us back into a swing trade in TNA and or the micro E-minis. And I like what I'm seeing here. It's just that I think that small caps have some headwinds, right? They've got tariffs are a problem. High interest rates, high lending rates are a problem. Some unclarity about future growth prospects, especially in the tech sectors, they are a problem. We've got geopolitical pressure. We've got political pressure on the healthcare sector. So there are all kinds of things that the market needs to worry about, which means I don't think it's just going to go straight up again. But we're getting there. We're getting there. We're clearing out some of the space. Every day that passes without negative tariff news is a good day, because that means we're getting closer and closer and closer to ultimate resolutions, deals being made. All that is good. Okay, let's take a quick look at Bitcoin, because it is in a nice pullback. I've got it on my buys list. It's not a buy just yet. We need to see the 21 hold. We need to see a green candle where it's above the open. I'm sorry, the close is above the open. And we need to see some better volume coming in. We saw very good volume coming in on that rally up to new all-time highs. This is just a very modest, shallow pullback to consolidate, to price in some weird stuff going on, I think, in the government. And maybe the dollar's being a bit, no, actually gold is way up today. So, and unfortunately, I got stopped out last week in my gold position. I've been in gold for about a month, and waiting for it to make a good move. And I just had my stop too tight, unfortunately. Anyway, that it is what it is. So pull back to the 21, not an inside day bar. So we keep getting these directional downward bars, right? A directional bar down is where the high is lower than the previous day's high and the low is lower than the previous day's low, like this bar right here. And this bar, yes, this one is an inside day bar. This is a directional two down, two down, two down. So mostly downward bars. We want to see something that is more of a directional bar up. The low of the day is higher than the previous day, and the high is higher than the previous day, and we're not there. But keep an eye on it. Gold, I think, has got a good run. I've been saying this for weeks now. It did look a little scary down here at the lows, but we did buy on that day. We sold a couple of days too soon, as usual. And it was this day right here, it was Thursday last week, I got stopped out because I just put my stop a little bit below the low that day. I was moving it up as the market was taking gold higher, and I just had it too tight. My fault. But a big green stick today, and it just looks like it's ready for breakout. Okay, now that is done. Let's take a look at a few of the mags. I'm waiting on Tesla. So I think Tesla is testing the lows of its. I'm not going to call it a bull flag. It's just a high base. It's trading range after a nice run off the lows. It wasn't a super impressive run off the lows. The impressive thing about Tesla is that when the market right here was making new year-to-date lows, Tesla was not. It was holding at or above the lows of the year. That's very bullish. And when it is moving higher, it's moving vertically. It's just that it likes to base for quite a long time. And I'm not so sure that it's ready for a new leg higher just yet. So it's a little concerning that it did get this breakout move. It printed a blue sky breakout. It was a 3+ month high, and then it got slammed right back down again. It's a false breakout, and that's a bearish sign. I have a friend who does Elliott wave theory, and he only trades about 6 or 7 stocks. Tesla is one of them, and he likes to play with the Elliott waves. I don't really put much stock in that, but his signal is that he's ready to buy Tesla when it's at 320 or even below, and he says it could go as low as 280 on this pullback move. I don't see that, but I don't think it's going to get below 300. I'd be surprised if it gets below 320, but a dip to 320 looks like it's kind of heading in that direction, so we will wait. What else are we interested in? I kind of like Amazon. I have it on my greens list. It was a big gap up on something. That was a China gap, I guess. Pulled back into the 21, bounced, pulled back into the 200, bounced. It's not a strong looking uptrend. It's not at all, but it is Amazon, and they do have some good stuff going on, and it's quite a ways below the all-time high. So it's got some good upside. It just needs a little more bullish traction. I'm not in it yet. Facebook, we are in Facebook calls over in the options room, and today's what we want to see. This is what we've been waiting for. This is why we do what we do. So this is a better looking uptrend right here. Very strong uptrend off of the bottom of the bear market cycle. More than 45-degree angles up with a very shallow, narrow pullback. And now it looks to me like it's going to print another very strong leg higher. So I like Facebook. I can't call it in the live trading room because we're already long in the other room, but it's a good looking chart. All-time highs are up here about 730, 740, and it looks to me like it wants to go there. I really like Avgo a lot. Similar kind of chart, just that it has earnings this week, Thursday. Yeah, Thursday after the bell. Probably will do really well. Probably will shoot way up. I just don't want to take on that kind of risk. We have Avgo in our long-term wealth building portfolio, and I'm content to just hang on to those shares. We're nicely now in profit territory with that, and we've held through this whole drawdown, so I'm not going to let go of those shares anytime soon. I think Avgo will be fine on earnings. And look, it's already up. Maybe this is the first major tech stock to do this. Already up at new all-time highs, if not equal to them. Very, very nice looking chart. Very strong. Lots of good stuff going on with the company. And yeah, it's a buy and hold. Netflix, I mean, not Netflix, Nvidia. So we did buy some Nvidia today in the live trading room, and we bought it early, so it's doing well so far. It is printing a inside day bar. Not a whole lot of information there because this is really not at the top of an uptrend or at the bottom of a downtrend. When that happens, an inside day bar tends to be a reversal, but it's better than a two down, right? This inside day bar after a directional two down is a good sign, a bullish sign. So we're long. We're just waiting for it to do what Avgo's doing. Earnings have already come out. They were very good. It was a gap and crap. Nvidia does that on earnings. I just don't like to hold over Nvidia earnings. They can be really, really good, and they shoot up overnight. And if you've got calls, you can't get out of your calls, right, until the bell goes off. The bell goes off, everybody's getting out. I don't know why that. It just gets loaded up with day traders, I guess. But no, this looks good. Your all-time highs are up here around 150. It's already at 138. I just, it's Nvidia. We've got to have some Nvidia on board. We've got long-term Nvidia in the wealth building fund. We've got a short-term swing in NVDL in our swing trades. So we've got bases covered. All right. Greens list. I'm not going to go through all of these. Let me just highlight a few interesting ones. So I actually had a trade in this one, CNI, and I got stopped out this morning on that big flush out. I don't know what happened, but I like it even more now. And it is a very boring stock. It's a railroad stock, but I think you could leverage this with some calls. It's in the S&P 500. This is a recovery play off the lows with a pullback, rather soft pullback, and it's a fib retracement as well to the rising 21 period moving average. Things are just looking a lot more solid in this. Now, if the economy is going into recession, you're going to see railroad stocks collapse. The fact that railroad stocks are now moving nicely off the bottom is a good sign. Datadog, one of my favorite from years back, software company. I think it's going to have a resurgence. Your all-time highs are up here, isn't that right? No, it's not. That was a big move. Not all-time highs. Crash, 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 crash. Tariffs, tariffs, tariffs. And then we're into a recovery phase. You can kind of see an inverted head and shoulders or a cup and handle here. This is a very nice looking base. Rounded bottom, shallow. And look at this volume balance down here since the earnings. Everybody's getting back on board. Datadog. I like it. I like it a lot. We're already long HIMS. One of the best looking trades, and I think it's number 2 or 3 now in the IBD top 15, top 10. It's up there. And so growth is off the charts, and increasing sales and margins are getting bigger, and they're advertising all over the place. So I think HIMS is a good trade. We got in just before that big green stick, and we're seeing a good healthy hold, not necessarily follow through, but a good hold near the closing highs on Friday. HRTG is a nice looking trending stock. This is what I mean by a trending stock, right? Everything's flowing up. The 21 is up, the 50's up, the 200's up. They're stacked in the right way. 21 above 50, 50 above 200. The LRC is up. You've got you're hardly getting below the midline of the LRC, and when it does come down into that area, it bounces cleanly. This is one from my momentum letter, and I just really, really, really like this setup a lot. Jets, I think, is going to have a good day. Like a lot of stocks, it's doing this inverted head and shoulders, high tight base in the right shoulder, nearing breakout. Not a great sector. It's got some headwinds, but summer travel season is coming up. And if rates come down and if oil comes down, and it is coming down, or at least it was coming down until the World War III broke out last night, if oil keeps coming down or reverses back to the downside, then you'll see airlines do well. what else? MSTR is a play on Bitcoin, and we are long this with a leveraged fund. It's just a nice looking new three-month high, soft pullback into the midline of the LRC, slightly uptrending. It's not a great looking chart, but it's a very nice way to leverage Bitcoin. We are long PLTR. It's doing a little bit of back and fill today, but it had a very nice day for us on Friday. We're moving up our stops into profit. Keep an eye on Sophie. There is a list. Let me show you. If you go to x.com, I still call it Twitter, and you find my profile and you scroll down, you will find I reposted this right here. I don't know who this guy is, but he's got a nice list of 8 companies that they all have this in common. They have growing earnings. You know, if you look at, let me show you SoFi. SoFi, where is it? There it is. So if we put in SoFi and go to the weekly chart, this is what you want to see, right? Rising, rising, rising. Every quarter reporting higher earnings than the previous one. Up, 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 up. That little black arrow, I'm not sure what that means exactly. That's, I guess, when they went profitable. I don't know. But that's what you want to see with a stock like that. And here's a list of 8 companies. Sophie's one of them. AMD is on the list as well. Companies that are going up and up in earnings, but the price is not. The price is contained down, maybe not down at the 52-week lows, but it's well under 52-week highs and well under all-time highs. That's a good heady mix, but with these kinds of stocks, for whatever reason, they're a little bit out of favor with the market. You have to have patience, but this is a good list to start if you're looking for some long-term investments, right? I like Sophie in part only because of this chart right here. It's getting tight. Consolidation. We've got the 21 above the 50. 50 is rising. 200 is rising. That means long-term uptrend, and it has had one of the highest RS ratings in IBD. The only thing I don't quite like is that I'm not seeing a whole lot of massive accumulation in this section right here. I would like to see that start. We had a little bit on Friday. Maybe we're going to get another high bar today, but we want to see people rushing into shares, and we're not seeing that just yet. So keep an eye on Sophie. Alibaba is on that list as well, and it is down at a pretty good place of support. It is in an uptrend. It's a new uptrend because it had a long time of falling off, falling off a cliff. And it was an inside day bar earlier. Now it has taken out the highs of Friday. I'm not so sure it's a buy with all the Chinese tariff stuff going on, but I think I'm right in saying that when the deal is cut with China, if it's not horrible for China, then we should see these Chinese stocks that have been held back really do very, very well. Keep an eye on IoT. It reports earnings this week. It's one of my favorite software names. It is doing a nice cup and handle, nice rounded bottom, shallow handle, right in the spot where you want it, right at the 200. The 21 is above the 50. Both are rising. All that's good, good, good. But I would not be a buyer on earnings. Look what it did last time. It beat. That's the green triangle there. And it got cracked all the way down. So you don't want to see that happen again. We're in the quantum computing space in both rooms right now. RGTI and QBTS are my 2 faves in that sector. And it is a shallow breakout, soft pullback into the rising 21. All looks good. Keep an eye on RYTM. It's a biotech stock. And I don't remember exactly how this one came on my list, but I like the setup. Right? Nice and tight, getting nice and tight, verging on breakout, and it's not a real big mover, but I think this goes to 70 pretty quickly. You can leverage that if it has some decent options. You can leverage that with options. And XNCR we've already seen. All right, it's 3 o'clock. Let me just take about 5 chart requests. TLT, I'll take a look at TLT. Yeah, I know. I saw this today too. Yeah, I got interested in the bonds when it did this big piercing candle, big green stick. It's not a two directional. It's actually two down because the low is lower than the low, the high is higher, lower than the low. But it is a nice looking bullish candle, and it triggered a good 5-6 day breakout. And I really thought bonds were going to finally give us the breakout that we've been waiting for on this multi-month pullback, right? It hinted at it on Friday. It closed above the 21 period moving average. Volume was very good. People were coming into bonds, and rates looked like they had rolled over. And if the Fed has no reason to raise rates, we should start to see people pricing in some discounting there. And I did read that our credit is of interest to foreign investors. Foreign investments in our bonds, corporate bonds mostly, are at really good highs. None of that played out today. I don't know what happened today. So it's kind of weird that we're not seeing a good backstop against the stocks with bonds. So technically speaking, we got there. It looked okay. We just have no follow through whatsoever. So we have to kind of throw technicals out the window with this, and you have to dig down into the macro picture. What in the economy, what in politics, what in geopolitical stuff is causing our bonds to be so weak? Nobody's buying them, right? You have these auctions and nobody shows up. So yeah, to me, they're a no-go zone. I did have a lot of hope last week. I really liked that candlestick. I liked the gap up that held. It filled the gap a little bit, gapped up again the next day, gapped up again and went to higher highs the next day. Looked very good on Friday. Good volume as well. And then today, just a big gap and crap to the downside. So I would stay out of bonds for now. The only time I'm going to get back in is when we get a close and a follow-through day above that black line. And we're definitely not there yet. All right, so let's take a look at Walmart. I know Walmart's doing well. Yeah, beautiful, beautiful, beautiful. This is just, we're seeing this all over the market, and this is why I can't get bearish right now. This nice, these are just bullish. Let's see what this looks like on the weekly chart. Yeah, see, this is a continuation pattern. It's not a bottoming pattern, it's continuation. And that's about as bullish as it gets, right? Uptrend, 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 new all-time highs, rounded bottom, soft, shallow handle on the cup. And where is this going to go? 83 to 99. That's a 16-point cup depth. And at 16 to 99, 115 is your target, which is, way up there. I really like Walmart. So Walmart, of course, is, there is some worry about tariffs affecting the cheap price of goods in Walmart. But what I'm thinking is that they probably have worked out a lot of those supply chain issues already. They saw it coming. They worked it out ahead of time. And with the discounting on scale that they already have, if prices do start going up on consumer goods, everybody's going to be shopping at Walmart because you're going to get the better price for the same stuff. So yeah, I like it. I like it. I don't know. Maybe I'll get us in. I'm going to add this to my greens list just so I have a visual reminder that it's such a good looking setup. Yeah, you could buy it today. You would put your stop down. I would say I would put it below the 50. Give it some room, like around 92. And I know that's a wide stop on something like Walmart, but just keep going up. And again, as I said, 115, 3 to 4 months from now is probably where it's going to be. We did Tesla already, and we did Facebook already. Let's look at Hood. Yep, yeah, I think this is new all-time high. So I kind of dropped the ball on Hood. We had a trade in it. I don't remember exactly where it was. It might have been this little Head and Shoulders right there. So we probably traded up in that little range. And my weakness as a trader is getting out of the winning trades too soon. The worst weakness you can have is getting out of your losers too late, right? That's when you really get into trouble and you're just going to see your capital dry up. the reason why I've been trading for 23 years and I trade full time and it's made some very, very nice money for us is that I keep my losses short. I keep my losses small. I don't care if I have to get in and out of a stock 3 or 4 times, taking little losses each time. I'll get back in again with if I still like the chart. I don't mind taking small losses. What I don't like to see is a good winner turn around and come back down again, and then I really kick myself. So that's when I tend to get out of things too early. I got out of Hood too early for sure, but this is I don't know. I don't know if I would buy it here. It might cool off for a little bit, but I tell you, Hood has got it's got a very strong advertising engine going right now. It's got the college age crowd. You know, my kids are all into Hood. They all have their accounts, and now Hood is doing online sports betting, isn't it? Right? Am I right about that? They're getting into crypto. They have a new crypto line. Yeah, I've never liked Hood because I always thought it was just a kind of gimmicky thing. But now I'm totally convinced it's good. I'm sticking with Interactive Brokers. I've been with it for 26 years. I'm not going to change, but 23 years. But I like the fact that my kids are getting into Hood, and they'll probably see that product go improve over the years. Yeah, I like it. It's actually, I guess I would buy it here. It would be a buy, but I would keep my stop below the range lows right there, about 62. And I'm not exactly sure where this is going to go, but I would just trail a stop higher. Yeah, that looks good. ERX. So I've been out of energy trades with a couple of trades in oil that I think one was okay and one was not so okay. But I've been out of XLE, ERX, ERY, with maybe one exception. I think we did try to do ERY for a little while. I don't remember how that one came out, but energy has been weak, weak, weak. Oil until today has been weak, weak, weak. Right? You've got all kinds of political headwinds. The drill, baby, drill, which hasn't even started yet. That's going to. You've got production increases by OPEC. So oil itself is under pressure. That doesn't mean that the people that sell the oil are having a hard time, although they are. They're down near 52-week lows. I'm not exactly sure why, but typically when oil prices come down, gas prices come down, demand goes up, and so because of scale, they're able to still make a pretty good profit. Let's just take a look at CVX. We had a little bounce trade on this, and we got out, and I'm glad we did because it turned around the next day. But it is building a base down here. It's been a hard slam, big hard slam. I'm not sure why I got so slammed on the tariffs crash when it was up here at 52-week highs, and then it was just in a matter of days down at 52-week lows. That is, you just don't see that in a major company like Chevron. So I do think Chevron is deeply undervalued here, which because it's one of the biggest. What does ExxonMobil look like? This is the biggest. Yeah, it also got slammed, and it was not as strong as Chevron. So Chevron has a better looking chart from the 52-week highs, 52-week lows in about a week. That just doesn't happen. Now we're seeing a higher low in XO. What does XLE look like? Yeah, actually not too bad. Not too bad, right? You've got here's your tariff low, here's a pivot low, and here's a higher pivot low, and our pivot highs are getting a little higher as well. So starting to build out. Now, the problem with that, it could just be a bearish wedge. I don't think it is actually. I think it's actually a new uptrend. So if I am correct about that, then it's a buy here because it's moving off support. You would put your stop at around 80. Your target would be maybe the 200 period moving average up here, which would be upper 80s. Yeah. So keep an eye on that one. I'm not going to buy energy. I've sworn off the energy trade for a while after several stop losses, and I just wasn't in sync with what's going on there. I'll do a couple more. APLD. Yeah, I know there was a lot of chatter about APLD in the other room, the options room. There's a guy in that room. He's not in the live trading room, but he was really banging the table on APLD. when it was up here and moving nicely above the 200. Then it fell below the 200, and he came out and said, "Yeah, buy some more." I think I haven't followed every tweet of his in the live room, but big up today. I'm not sure why. It must be some news out there, some kind of a catalyst, but this is a good looking move. It is above, yeah, it's just above that that sequence of lower highs. So this looks good. Yeah, it's not my kind of stock. I have a rule that I don't buy big green sticks like this because very often on a big green stick like this, you could get a much better price the next day. Like, here's a big green stick, and then you could have gotten a lower price. If you bought at the top, you could have gotten a lower price the next day, and you just see that quite a lot. So I would wait. I would wait if I'm not already in. But if I'm in, I'm holding. Definitely holding, and I'm going to put my stop up just below 9 and trail it higher from there. Let's do one more. Twilio. So Twilio actually wrote an article somewhere over on Seeking Alpha, and I wrote an article for an online publication on Twilio. This was about 5-6 years ago now. It was in my family fund, had been for a long time. Let me see the weekly chart. Yeah, this is the cycle. This is the classic business cycle right here. So I had a lot of interest in it in here. I was long in my family fund. I started writing articles, and then it really took off, really took off with a lot of new expansion. And then it just got hit with falling margins, competition, some regulations, and on, right? The typical things that happen with the tech sectors. You get a first mover in the tech sector, and you can ride it for a while, a couple of years maybe, and then the cycle starts to come to an end. Now, there could be, and it seems like there is, based on the chart, a kind of second life for Twilio. So if they're coming out with new product line, if they are improving their margins, which are very important for software because they tend not to have much in the way of overhead, and if they're landing some new customers, if they're increasing their enterprise value, then yeah, I think this looks good. Now, just from a technical perspective, it is a rounded bottom with a nice looking cup. We're seeing this all over the place, right? Nice high tight base, pretty good volume balance. Yeah, this is either a hold or a buy. I would say you could buy it right here at the current price. You'd put your stop below the 21, about 10 points below, and your target would be up here in this cluster about 150. Yeah, that's actually nice. That's a nice looking trade. It's a nice setup, and I know the company is good. I just don't know if they've kind of got a new thing going now or not. I'll have to check. All right, guys, I'm going to let you go. God bless everybody. Have a great rest of the afternoon. I will produce the video. I'll be back in the room in a little bit, and we've got we'll have about half an hour of trading left. Not sure we'll do any new trades, but we'll see what shakes out. God bless. Bye for now.